All right, let's dive deep into Nava Ltd. We're talking Q2 FY25 performance, going way beyond the headlines, into the nitty-gritty. And we've got the goods, right?
Absolutely
Their
second.
official press release, fresh from the National Stock Exchange of India itself.
hmm
We've got their investor presentation, always some juicy bits in there.
Always.
And just to be extra sure, we've got the independent auditor's review.
Gotta have that extra layer, right? Make sure we see the whole picture. It's like having that backstage pass, to really get what's going on with Nava.
Exactly. And at first glance, things are looking pretty good. Nava is reporting a consolidated profit after tax that is up whopping 71.7% higher year over year, hitting 331.9 million Indian rupees.
Yeah, that's not just growth, it's efficient growth. That's the kind of thing that makes investors happy.
Definitely. Especially because they did this while revenue actually dipped a bit, like about 2% less than the
Yeah,
same time last year. So it's not just about bringing in more money, it's about using it smarter.
you got it. That tells us they're controlling costs, but also still finding ways to grow, right? You need both.
For sure. And speaking of smart moves, their standalone profit got a nice little bump from a 10 million US dollar dividend from their subsidiary in Singapore. Not bad, eh?
Not bad at all. That's the beauty of Navi, you see. They've got income coming in from all over the world, helps them stay steady even if one region hits a rough patch. Diversification, it's key.
Makes sense. But even without that dividend, their standalone performance was solid. Remember their metals division wasn't doing too hot last year.
Right.
Now it's back in the black.
And their power plant in Telangana, 114 megawatts, keeps chugging along. That reliable performance from the core business, that's the foundation for everything else they're building.
Now let's hop over to Zambia. Their subsidiary there, Moamba Energy Limited, or MEL, they've paid off all their outstanding interest payments.
That's a good sign. Shows they're serious about financial health. Sends a strong signal to investors.
Absolutely. And just to add to that, their Singapore subsidiary got a 41.7 million US dollar payout. So yeah, it seems like Nava's really getting their finances in order.
Ducks in a row, all of them.
All right, let's talk energy. This vertical saw some pretty exciting growth this quarter. Revenue up 4%, but profit before tax jumped a massive 61% year over year. That's a lot of energy.
Yeah, and part of that success comes down to how well they're running those plants. Memiel's plant in Zambia operating at 84.4% capacity, like a well-oiled machine, just humming along, maximizing output.
And their 150 megawatt plant in India through NBAL hit a plant load factor of 73.2%. For those who aren't power plant experts, that means they're getting a lot of juice out of that facility.
They are indeed. And they're not stopping there, They've actually started construction on a new project, 300 megawatts, at Memiel in Zambia. And get this, they've secured a 260 million US dollar loan to finance it.
Wow.
That's a big vote of confidence from the lenders. They see Nava's vision and they believe they can deliver.
Okay, enough about power plants for a second. Let's talk about something a little different. Avocados. Nava has a subsidiary called Nava Avocado, and they've been busy. Planted over 92,400 avocado trees in Zambia. First phase of the project.
Now, that's a lot of avocado toast. But jokes aside, it really shows you how Nava is thinking. They're willing to branch out, explore new markets, diversify. Global demand for avocados is through the roof, and Zambia's climate is perfect for growing them.
Right, and it's not just a small experiment either. They're about to plant another 100,000 trees, and the Zambian government is supporting the project. Big time. Roads, power supply, the whole shebang. They see the potential here too.
It's a smart move by Nava, tapping into a growing market while also supporting economic development in Zambia. Everyone wins.
Let's do a quick rundown of all of Nava's different business segments, just to get a sense of the scope. We've touched on some already, but first up, ferroalloys.
Right, they're a major player there. And they've got a real advantage. Using their own power plants to keep costs down and exporting to big markets like Asia and the Middle East. When you control your energy costs, you can really compete.
Makes sense. Then there's their Indian energy business. Kind of a mix, right? Captive power plants for steady income, and then merchant plants where they can play the market a bit.
Exactly. Stability from the captive plants, and then the merchant plants let them jump on opportunities when energy prices are favorable. A good balance.
Now, over to Zambia mining. They've got these massive coal reserves, which obviously fuel MLAL's power plant, but they also sell to other industrial clients, bringing in even more cash.
Synergy, right. The mining feeds the energy business, and then they generate extra revenue on top of that. Very smart, makes the whole operation more resilient.
For sure. Then there's their healthcare segment, focused on lifestyle products, mostly in Singapore and Malaysia. It's what they call asset light, meaning they don't need to pour tons of money into infrastructure.
It's a good counterbalance to their more industrial stuff. Higher margins, lots of growth potential, a nice mix.
Definitely. And finally, their operations and maintenance segment. Basically, they provide services to Meliel's power plant in Zambia, brings in a steady stream of U.S. dollar income.
And what's interesting about that is it shows their expertise. They're not just building these plants, they're the ones keeping them running smoothly. Generates more revenue, and it also builds their reputation, shows they know what they're doing.
Right, so we've got this picture of a company that's doing really well. But the independent auditor's report did flag a potential issue. It's about some trade receivables from a customer of Meliel, 170,259.09 lakhs, to be exact. Now, trade receivables, for those who don't know, is basically money that's owed to Nava, but they haven't received it yet.
All right, like outstanding invoices.
Exactly. So the auditor's saying there's some uncertainty about whether they'll actually collect this money.
Yeah, but it's important to understand who this customer is. We're talking about Zesco, the power utility in Zambia, majority owned by the Zambian government. So there's a sovereign guarantee backing those receivables. It's not like some random guy who forgot to pay his bill.
Ah, okay. So not your typical debt collection scenario.
Right. Plus, MLA also has a favorable arbitration award in their favor, so they're in a good position. But they're being cautious. They've recorded an expected credit loss allowance just in case. Because, even when things are looking good, there can be surprises, things outside of a company's control.
So it's something to keep an eye on, but not necessarily a reason to panic.
Exactly. It's about assessing the risk, understanding the nuance of the situation.
So we've covered a lot, right? Profits, business segments, even avocados.
Yeah.
But what really strikes me is how Nava Ltd is setting themselves up for the future, like strategically.
Yeah, you get caught up in the numbers, right? Zoom out a little bit, and you see the big picture, like that phase 2, 300-megawatt project in Zambia. They're expanding, sure, but it's
more than that, isn't it?
Yeah, think about it. Zambia, they rely a lot on hydropower, which is great, when the rains are good, but a little unreliable when they're not. So Nava comes in with these thermal power plants, and suddenly...
steady energy no matter what the weather's doing.
You got it. And remember how they paid off all those loans in Zambia for the power projects? That wasn't just good bookkeeping. It was strategic.
Okay, now I'm curious. How so?
By getting rid of that debt, they free up all this cash, more flexibility for new investments. They're not tied to the lenders anymore. It's like clearing the decks, right? Ready for action.
So they're playing chess, not checkers. Got it.
Another smart move. This thing called captive resources, like with their ferro alloy operations in India, they're not just making the metal, they're using their own power plants to do it.
So they're not stuck dealing with crazy energy prices.
Exactly. Like having your own private gas station when everyone else is paying a fortune. And it's not just power. In Zambia, they're using their own coal from their mine to fuel Memiel's power plant. Top to bottom, they control it.
Vertical integration, right? The whole supply chain.
Makes the business tough, can handle the bumps in the road. Now, let's talk about something really interesting, all right? Their diversification strategy. I mean, it's amazing how many different things they're doing. Energy, mining, healthcare, even avocados.
Yeah, that avocado thing, it's different, isn't it, from their usual stuff? Too far out there, maybe.
Nah, I don't think so. Avocados, man, everyone wants them. Global demand, sky high. And Zambia, the climate's perfect. They're not messing around either. Top-notch tech, building a whole processing facility. They're in it to win it.
More than dipping their toes in that.
Cannonball. Plus, it's not just about the money, right? This project creates jobs, helps people learn new skills. It's sustainable, responsible growth.
Now, let's circle back to that thing with the trade receivables.
Yeah.
From Zesco in Zambia. You mentioned the sovereign guarantee, but...
yeah, it's still bugging me a bit. Why would the auditor flag it? Should investors be worried? Good question. Auditors, they got to point out any risk, even if it's tiny. Here, they're saying, hey, maybe, just maybe, Nava won't get all that money.
But probably will, right?
Probably. And look, Nava's being open about it, not hiding anything. They even set aside some money in case they don't get it all. That's called a credit loss allowance. Shows they're careful, thinking ahead. And that builds trust, right, with investors.
Transparency is always good.
Yeah.
So they're acknowledging the risk, but also taking steps to cover themselves. What's the takeaway here about Nava as an investment?
They're sending a signal, I think, loud and clear. We're a company that moves, grows strategically, diversifies, manages its money well, and isn't afraid of smart risks.
Not just playing the game, they're changing it.
Now, that's exciting, but let's be real. No company's perfect. What challenges are they facing? What bumps in the road? That's the question we got to ask, right? And lucky for you, we're going to answer it. In the final part of our deep dive, stay tuned. Things are about to get even more interesting.
All right, final part of our deep dive into Nava Ltd. We've seen the good, the strategic, even the avocado side of things.
Right, right.
Now, let's get a little predictive. What's next for Nava? What's coming down the road, both good and maybe not so good?
The big picture stuff.
Exactly. Let's start with, well, the global economy. Inflation's still a thing. Interest rates are going up. Does that mess with Nava's plans?
It could, especially, they're working in a lot of countries, using loans for some of those big projects. If borrowing gets too expensive, it throws things off, delays, maybe even makes a project not worth it anymore.
So careful navigation required.
Absolutely. And then there's commodities. Metals, mining, that's a big part of what Nava does. But those prices, they go up and down like a roller coaster. What happens if, say, manganese or coal takes a dive?
Profits take a hit.
Exactly. You got to have a
Yeah.
plan for that. Hedging strategies, ways to protect yourself. Now, let's look at energy specifically. The world's going green, right? Pushing for cleaner stuff. Is that a problem for Nava with their coal plants?
Yeah. It's a big question. Coal's got a bit of a bad reputation these days.
True. But here's the thing. Nava, they're not ignoring it. They're actually using this technology called fluidized bed combustion. More efficient, better for the environment than those old school coal plants.
So riding the wave,
Yeah.
not getting swamped by it.
You got it. And hey, who knows? Maybe down the line they'll jump into renewables, solar, wind, that kind of thing. Big change, sure, but could be the right move long term.
Now, what about those riskier things, geopolitics, that kind of stuff? Nava's in Zambia, which, has its own issues, politics, economics, all that. Could that throw a wrench in the works?
It's always a possibility. You get some upheaval, or maybe the rules change suddenly that disrupts things. Nava has to be flexible, adapt to whatever comes up.
Roll with the punches.
Exactly. And, of course, there's competition, other companies doing similar things. How does Nava stay ahead?
Good question.
Got to keep moving, right? Innovation, new technologies, always looking for the next opportunity, and new markets to tap into. It's a race, basically. But Nava, they've got the experience, they've been through tough times before and come out stronger.
So for our listeners, what's the big takeaway here? What have we learned about Nava Ltd?
I think what we see here is a company that's not afraid of a challenge. They take it head on, turn it into an advantage. They're ambitious, strategic, and they know how to bounce back. Plus, they're always evolving, never standing still.
Definitely a company to keep an eye on.
Absolutely.
Well, that wraps up our deep dive into Nava Ltd Q2 FY25. We covered a lot, from those impressive profits to, well, avocado farms in Zambia.
Hopefully you've gotten a good sense of what Nava's all about, where they fit in the big picture globally.
And remember, folks, knowledge is power. Keep learning, keep exploring, keep asking those tough questions.
And maybe, enjoy some guacamole while you're at it.
Until next time, happy investing, everyone.